commercial real estate and related services who have a close pulse on the current market environment. My name is Anton Madley, co-founder and CEO of Peak Financing, and I'm honored to welcome Kay Singh, who is the founder and CEO of Grow Rich Capital. KK has been investing in multifamily properties, but he also has been investing in gas stations and laundromats. So we have the pleasure to talk about some unique asset classes today, which is very exciting. Welcome, KK.
Thank you very much, Anton, for having me on your show.
Yeah, it's a pleasure to have you with us. So you live in the Midwest, right, in Indiana, and I've now known you for a number of years, and what immediately stood out, obviously, is that you have been investing in gas stations as well as in laundromats. Now, gas stations, I would say, is a niche, but it's probably not that unusual. Laundromats definitely is, right? So maybe you can give our listeners a little bit of a background of where you're coming from and how you ended up in investing in gas stations and laundromats, and then we can touch on, obviously, also your activity on the multifamily side. But it's only that unique niche, these unique niches you're active in, is only very interesting for our listeners to hear more about.
Sure. So I came here from India back in 2000, along with my family, and I had a job. I'm a Microsoft certified system engineer, and I lost my job after 9/11. And then I had no way to go. I didn't want to go back. And then I had some friends who offered me a share in the gas station business. So I got a 30% share in one of their gas stations and started managing that gas station. That's how I got into the gas station business. And after about 6-7 months, we lost the lease for that gas station. So the lease was close to the expiry and the owner didn't renew the lease. So I was out of job one more time again within a year. And then finally, I decided to move to Fort Wayne and buy a small neighborhood gas station by myself and with my nephew. So that's how I got into the gas station business. And we grew from there, bought several gas stations, and now sold several gas stations.
Mm-hmm. Very good. So initially you managed a gas station and then you bought a gas station. Did you also self-manage the gas station that you bought?
Yes, we always, gas station is a cash business. You can't have a property management to run your gas station. You have to manage yourself. Right. I had partners with me and for several years. So we grew by buying more and more, and all my partners were at one time my employees. So I gave them a share. Somebody who worked loyally for a few years, then I would give them a share and become my partner. And that's how we grew, bought more and more gas stations.
Yeah, that's great. And so I assume that a lot of family members have been actively involved in it.
Yes. My nephew has been with me, my partner, for years and years. And then my daughter joined us. Then my son now, he is also managing one of the gas stations. So he joined the gas station business too.
Yeah. And as you mentioned, right, particularly early on, it was much more of a cash-driven business. So it only makes sense to have trusted partners and employees, right, that are not skimming. How is that today? Obviously, when you started out, cash was still a more significant portion of gas stations. Is that still the case today?
Yes, it's still the case today. But we still had the other cashiers, so we couldn't have, like at one time we had 75 employees. So my partners were managing the gas stations.
Yeah.
So each partner was managing 2 gas stations at a time. So that way they go there, do the paperwork, count the money, take it to the bank, order stuff and all that.
Yeah. Okay. So are the gas stations that you have been buying, are they all branded with a major brand?
Yes, they are all branded with major brands, and all of them had convenience stores, because here in Midwest, convenience store is the main thing to make money on. Gas, you don't make much money on the gas.
Yeah.
So maybe you pay the electricity bill with the gas. That's it.
Yeah.
And all the money you make is with the inside sales.
Yes. Yeah. I would probably argue that's the case all across the country, right?
Yes.
Yeah.
Yes.
So that's why it's so important that the convenience store side is really well run, right? So that you get the volume there. So how do you deal with market fluctuations when it comes to the gas purchases? Obviously, the convenience store side is one piece, but you still have to deal with the gas purchases, and depending on how you purchase that, you are either upside down or you win, right? So how do you deal with the price fluctuations on the purchase side compared to what you need to offer to your end consumer, who then ultimately show up at your gas stations and then hopefully get into your convenience store?
Okay, so gas works differently because you have to have enough tanks to store gas. So we can trade gas. We have to buy when we have to. Doesn't matter what the price is. We don't want to run out of gas.
Yeah.
So we have previously 10 years back, we used to order by phone and then by computer. But now we have these devices at the gas station level. It automatically tells the jobber when to send the gas, so we don't have control over that. We have to buy gas when we need it. Okay. And we can't have like 500,000 gallons of gas at a gas station, because the storage is limited to maybe 10-12,000 gallons. So we can trade gas. We have to buy when we have to.
When you have to, yeah. So everyone is in a similar boat as you are. So that's
yes,
a kind of an advantage, right? So no one can buy up and then take advantage of lower prices and dump their.
No, the street drives the price.
Yeah.
The street drives the price. If one person goes up on the street, everybody goes up. If one person goes down, everybody goes down.
Yeah. Okay. Yeah. So what would you say is you mentioned that the gas is just good enough to pay for your utilities, right? Is that the case with all the gas stations, or is it more like with kind of the medium-sized gas stations, or would you have some of the larger ones where it's a little bit of a different percentage? What would you think?
I think it's across the industry.
Yeah.
We don't make much money. It's just to bring the customers in and sell the stuff from the store. Yeah. Even in the bigger, like we have Loves here, we have other big truck stops, and they also make money on the inside sales. Right. Because there's a credit card fee involved. We have to pay that credit card fee. That takes like 4 or 5, now even more than that, cents off. So if the margins are like 10 cents and 6-7 cents is credit card fee, so you don't make much. Yeah. It's really competitive there, right? Very competitive.
Yeah. So over the years, since you have been in business now, it's around 20 years, right?
Yep.
Uh,
22 years.
right. So what changes have you seen during that period?
Well, when I got into the gas station, I was much younger
Mm-hmm.
and I could work a lot harder. I mean, we spent like hours and hours, 12 hours a day, 80 hours a week. But now, since I'm getting older, it's been 22 years I've been doing this. I got burnt out a little bit. And I got into the real estate. So I started selling gas stations or giving to my partners.
Okay. Yeah. So you try to move away from the operational heavy real estate. Obviously, it's real estate too, but it's still very much an operational business, right?
Yes.
Yeah.
Yes. It's
Yeah.
very operational.
Yeah. So, what made you decide to buy laundromats then?
Well, there was a empty lot beside one of my gas stations, and a block away there was an old beaten up laundromat, and they used to come to our gas stations to get quarters, and always they were always mad because their machines took quarters or they didn't work properly, they didn't wash the clothes. So we were hearing a lot of that. So I thought, okay, there is an opportunity, and we have an empty lot just next door. So why don't I buy that and put up a brand new laundromat? So I started researching about the laundromats, and I had never been to a laundromat in those 12 years.
Mm-hmm.
So we always had a laundry machine at home, so we had never seen a laundromat, but we had seen signs saying coin laundromat. But then I researched and did a lot of research, and I built that from ground up. I bought that lot and built it from ground up, and nobody wanted to finance the laundromat at that time. Banks didn't know how that laundromat business works, and we didn't have much knowledge about the laundromats either. So I had to go with my own cash to build the building, and then I got a loan on the equipment though. So I bought that equipment and the card system and all that, and I built I think the best laundromat at that time in Indiana.
Oh, really? Wow.
Yep. Yep.
Yeah. So, was that all cash business initially, or did you do it immediately with some form of cards, or how did you run?
None of the machines takes any cash,
Mm.
neither the washers nor the dryers, even the doors open with a card.
Okay.
So
Yeah.
they can't even open the bathroom door without the card. So nobody can walk into and start using the restroom without unless they are customers.
Oh,
So they can only enter the bathroom if they are customers.
okay. And do you have an attendant that people actually are able to buy these cards, or how do your clients
Now
have
there are
access to them?
there are terminals. There are two terminals built into the walls. So it's touch screen. They can come and touch the screen. And initially, I did have attendants to show them how the cards work, how to get a card, how to check the balance and all that. So initially, I did, but after 1 year, I thought, okay, it's wastage of my money because they don't have much to do. So I went unattended. And everything is online. I can do anything from my computer. So why do I need attendance there? So I have these two girls. They come in the evening for 2-3 hours and they clean up the laundromat and lock it. That's it.
And that's it. Yeah. So how
Yeah.
many hours per day is that open?
We open at 7 o'clock and close at 10.
Okay. Yeah. And so how does it work with maintenance and breakdown, repair, and all that of the machines?
In the last 12 years, maybe I had called the technician 4 or 5 times.
That's it. Yeah.
That's it. Because most of them are plug and play. and you just call the distributor, tell them the problem, and they will send you the part overnight. It's all plug and play. Parts are all plug and play. Just pull some wires and pull. All you need is a screwdriver.
Yeah. So how did you decide where there was a need for a laundromat? Right. Obviously, you see them in various places, but it's not something that you see everywhere, right? So you need to be close enough to your client. So how did you come up with a, I don't know, a market study or something?
I got the demographics done.
Yeah.
So similar to the real estate, laundromat has its own way of demographics.
Yeah.
So we check the percentage of the renters, the education, the price of the houses and all that. So you can do your due diligence by getting the demographics from the distributors.
Yeah. Okay. What about competition? Is that a concern to you? Obviously, it's not yes, you need to build it and you need to buy the machines, but it's comparatively low cost of an investment, right? Comparing it to a typical commercial building or even a gas station. So how do you kind of make sure that you are not suddenly having multiple competitors that are...
Fort Wayne is oversaturated with laundromats, and I'm sure other cities are too. Mm-hmm. But you have to stand out. And the way I stood out of the crowd, I had a laundromat, brand new laundromat, maybe less than 5 years old laundromat, half a mile from my laundromat where I built it. And then I had that one block, I had that old beaten up laundromat as well. The same owners owned both. So the one that was old beaten up, that closed down immediately. I opened because nobody wanted to go there. And I took most of the business because the machines I had put were different from anybody in Fort Wayne. So now one place has a laundromat like mine in Fort Wayne, but I had 200 G-Force machines, express machines and express dryers. So they would wash, and I had bigger machines like 90 pounders. Mm-hmm. So that's people like to bring all their laundry, put it in right there. And I had two of them. Mm-hmm. And they want to get in fast and go out fast. So they can come and put 90 pounds in one machine, 90 pounds in the other machine, and then take it to the dryers. And with the card system, I could market with free dryers and all that, bonus dollar, free dryer, rewards. So our card system has a loyalty program built into it.
Yeah, really cool. Yeah.
So it stood out of the crowd because everybody had the similar old beaten up laundromats. Nobody had the card system. Nobody had the 200G machines. Nobody had the 90 pounder machines. So everybody was driving to our laundromat. And I did marketing over the Facebook and Google.
Yeah. Very interesting. So talking about standing out, is that also a similar strategy on the gas station side, or the gas stations more driven by the traffic flow?
No, gas stations are more driven by the traffic flow.
Yeah.
And still you can do things differently, but not much because you're just selling about the same stuff.
Right.
And these big companies like Frito-Lay's, Pepsi, Coke, they control you in such a way that everybody has the same prices.
Right.
Yeah.
Very good. So after having done the gas stations and laundromats, so what made you decide to move into multifamily? I think you also did single family, right?
Yes, that's how I got into the real estate. So though we owned the gas stations, real estate, we never thought we are in the real estate business.
Yeah.
We owned real estate before we bought this single family portfolio. So one person, a very respected person from our community, he had this single family portfolio of 40 single family houses.
Mm-hmm.
So he offered me that portfolio, and I knew nothing about real estate. I had never rented a house, and he promised that he will coach me.
Wow.
And we ended up buying his portfolio of 40 single family houses without doing any research, without underwriting, and the bank gave us a loan, and we were happy to start, and I started managing myself to learn.
Mm-hmm. Yeah.
So I started managing, and when I went with this old person, and he was old school, I didn't realize that he was doing everything with a pen and paper. And when we had bought, okay, he started telling me that write a receipt like this. He was spending like all day. He and his wife were spending all day at the office managing the tenants and getting the rent, giving them the receipts and writing notices and all that. I said, I can't do that, because at that time I was managing a gas station and a laundromat.
Mm-hmm.
I said, I can't spend that much time here sitting in the office. I have other businesses to take care. I had at that time I had 8 gas stations, and one of them I was managing myself. And I realized I have to do my own. So I started learning on bigger pockets online. I found a this management software that I signed up, and online leases and all that. So I did everything because I was computer savvy. I was a computer professional. So I did everything. After about 10 days, I did let him go. I
Okay.
said, yeah.
You told him, I don't think I need your help anymore.
Yeah, we call him uncle. So I told him, uncle, I think I'm going to go everything paperless.
Yeah.
And so I don't have to come to the office, and I can do it from anywhere. So you don't need to come. You can enjoy your life, rest of the life.
Yeah.
And I'll take it myself. If I need your help, I'll give you a call.
Yeah. Yeah.
So
So when was that? When did you buy that portfolio?
it was 2015.
Okay.
Yeah.
Yeah. So at that point, there was only plenty of software available, right?
Yes. Yes.
Yeah.
I
Okay.
had online leases. I had online notices. Everything online. Pay the tenants. I made them pay online.
Yeah.
And they were paying with the credit card. They were paying with the bank account. So at that time, everything was available
Yeah. So did you use software that was specifically
for single family.
single family? Yeah.
Yes.
Okay. Yeah. And so you did that, and then you got the multifamily bug at some point. So what was the trigger for that?
So when I started, this is very interesting. When I bought this, we bought it in June. We closed this 40 single family portfolio in June. And I thought, now we are in the real estate business. We don't have to pay any tax.
Mm-hmm.
And but we ended up paying even more tax,
Mm-hmm.
because in 6 months, we made a lot of money. So we ended up paying more tax.
Okay.
I said, when my accountant told me that this is the amount of tax that you have to pay, I was shocked. I thought, okay, we are in the real estate business, and real estate professionals are not supposed to pay any tax. So he said, well, you didn't plan properly. You didn't get cost segregation done. I said, what cost segregation is? I didn't know even what cost segregation. So he gave me some tips, and we had never asked him. But when I started researching about the multifamily, and a lot of people who had like 2 houses, 4 houses, 5 houses, they showed up on my office door and would try to sell me at that time. And I said, no, I'm not buying anymore.
Mm-hmm.
And it's the New Haven. The name of the city is New Haven. So it's close by about 20 miles here. So we had a house almost on every street.
Yeah.
So I said, okay, we are not going to buy any more. Otherwise, we'll buy the whole town and we are putting all the eggs in the same basket. So I started investing passively in multifamily to get that cost segregation in K1 losses. That that really triggered me to get into the multifamily when the first I invested 50,000 and got a 38,000 K1 loss.
Yeah.
And that triggered me. And then next year I invested in 5 deals. Next year I invested in 5 more deals. So that's how I kept investing. And at one time I had learned so much, and I thought, okay, why did somebody offered me to become a GP? And I said, why not? Let's give it a shot. So I transitioned to be GP, and I've done 8 deals now. We have turned around 3 deals that we. So I mostly focus on capital raise, and we have sold 3 deals already, and the returns to my investors have been awesome,
Mhm.
and they like to come back and invest with me again and again.
Yeah, that's great. It's very interesting that you mentioned that when you bought the single family portfolio, that you had all that tax liability, right? I think probably part of it, obviously, I do not know your situation, but part of it was probably that your tax advisor, at least at that point, was not that familiar with all the benefits that you can get with real estate, from depreciation to bonus depreciation, cost segregation, and so on. And we see that a lot with single family investors, that the CPAs that they are using are just not that familiar with all the tax benefits, right?
Yeah.
And it looks like once you moved over on the multifamily side, you were exposed to that world, and naturally you were then put in touch with CPAs that actually know to take all the benefits that real estate provides. Right?
Honestly, and I thought that this is something that the CPA does for us. We don't need to worry about. We don't need to learn about the taxes, and whatever he told us to pay taxes, we would pay.
Yeah.
And we thought, we are not professionals. He's professional. He's doing the best job he can.
Yeah.
But I was wrong. And after we paid that much tax that year, I started learning the tax laws myself. So I benefited it from a lot myself, and I educated a lot of other people to do the same thing too.
Yeah.
So I think anybody, your audience listening, if they are not paying attention to the tax laws, they're leaving much money on the table. They're working for the government.
Yeah.
They're working for the government.
Yeah, that's definitely the case, right? And you need to work with either you're an expert, or you need to pick the right experts on the CPA side, right? That really understand real estate, right? And just because someone is great as a CPA for let's say a regular corporation, even for large businesses, doesn't mean that they really understand all the depreciation benefits that you have on the real estate side, right?
Yep, definitely.
Yeah. So you have been investing obviously in Indiana, but you also have been investing in Florida, right?
All over the nation.
Yeah.
All over the nation.
So where do you see you are heading going forward? Obviously, we have had a very good run in real estate, and particularly multifamily over the last few years. Do you see yourself to continue down that path with multifamily, or do you have something else that piques your interest?
No, I'm 58 years old. I'm looking at my retirement. I'm not going to be doing something else.
Yeah.
And I have son who's in business with me too. So I want him to take over some of my burden, and so that I can spend. I love doing real estate. I'm very passionate about real estate. I didn't even know before that I am so passionate about it, but I'll keep doing real estate. And I know every aspect of it because I have been a coach too.
Mm-hmm.
So for the last 4 years, I have been coaching as well. So I've learned so much that I want to keep educating other people too.
Yeah, that's great to hear, right? So Kay, that was really very interesting, and thanks for sharing the stories, right? How you ended up in multifamily, and certainly our listeners enjoy to learn more about the laundromat as well as a little bit about the gas station business. Even though obviously you could talk much more about it. If someone has an interest, I'm sure you're happy to share your knowledge. So how could our listeners reach you?
They can go to our website, growrichcapital.com. And if they want to schedule, there's a lot of information on the website as well. But if they want to schedule a call, they can schedule a call from there as well. If they want to get on investor list, they can fill up their information to get on our investor list. If they want to learn something about the gas station or laundromat, they can still schedule a call with me.
Yeah. Okay. Very good.
And I have a Facebook group. You're a member of it too. So 10x Multifamily Investment Group. So if somebody wants to 10x their money, join that group.
Yeah, that's definitely very important, right? Networking is important physically, but it's also very important
Online,
right? And whether it's Facebook, LinkedIn, and other outlets, it's very important. Yeah,
very important. Yes.
Thanks again, KK, for joining today.
Thank you very much for having me, Anton. It's my pleasure.
Yeah, talk to you soon. Bye-bye.
Thank you. Thank you.